This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. And it's a full house today. After some time, I'm Prashant. With me, my colleagues, Sonia and Nigel. And what should we start with, guys? It's raining cats and dogs outside. Last night was terrific with that tennis match. So I guess all of us are going to be a bit groggy.
And the markets are at all-time highs.
And the markets are doing well.
Well, what a game last night, right? I mean, it had class all over it. That 20-year-old coming in there.
Yeah.
You know, at crucial points, hitting a drop shot, you know, going for the outstretched winner on the forehand. It was absolutely brilliant tennis. I haven't seen tennis like this in a very, very long while. And the crowd was backing the youngster.
Absolutely. 20-year-old, right? And
yeah.
I think men's tennis was lacking a prodigy for a while. I mean, Djokovic, Federer had tennis in a chokehold for very, very long. And now finally someone who's perhaps, termed as the real deal. But it was epic. Really.
I'll tell you a small incident. My kids actually say a small prayer before going to sleep. And and they'd already said yesterday's prayers. And before the match started, and I went into the the bedroom with the TVs, and my son was saying a prayer, and I said, "Well, what's going on? I mean, you just said your prayers." He said, "Well, I want Djokovic to win." So it was a little.
It was the end of an era, so to speak, or the start of a new one, rather.
But 36 years old, and what a game, right? 4 hours plus. I mean, you got to say something about the guy. But let's see if this is really the passing of an era. If this is just one sort of Grand Slam, and there are many more to come. Djokovic has won the French Open, he's won the Australian Open as well, just this year, right? So we'll see, but this is a big one.
I don't know if you guys remember, but when you were younger, there was Michael Jordan, right, in basketball, and there was before him Magic Johnson was the GOAT of basketball. I used to watch a lot because of my brother. And when Magic Johnson sort of passed the baton to Michael Jordan, it seems like that. There's like a power shift, happening right before your eyes. So pretty epic, if you don't call it.
It is absolutely. Well, let's kick it off in terms of what you need to know as far as today's trading session is concerned. And it's looking good. I mean, let me just begin by saying that. And I'll tell you why. Because last 1 week, we've seen what I would call it a bit of a regime change. A new narrative is really taking hold in markets over the last 5 or 6 days. And I'll explain. The new narrative is that the soft landing, which is basically the ideal choice for the Fed, which is not too hot, not too cold, that is becoming the base case for many now. When I say soft landing, I mean soft landing for the US economy. What is soft landing? It is basically a combination of softer inflation and at the same time, a labor market which is not weakening too much. So it's like a Goldilocks kind of a situation. Inflation under control, but no dearth of jobs as well, good jobs as well. And that's where the US seems to find itself. This is the data which backs it up, right? So CPI on an annualized basis came in at 1.9%. The Fed target is 2%. So it's right under that 2% threshold. And job growth in the US is still pretty strong at almost 210,000. These are, the last stated numbers that we had. So just putting this together. And look at how the markets reacted. The 2-year has seen an absolute crack. 40 basis point fall in 6 sessions flat. From a high of 5.1%, intraday high of 5.1% on the 6th of July, it closed at 4.7% on Friday. By the way, the Friday bond yields went up a little bit. But even accounting for that 2.5% move higher, it's a 40 basis point fall in just 6 sessions flat. The dollar index, right, it's even more dramatic. The dollar index is down 4% plus in the last 6 sessions. From a high of 103.57, it's fallen to 99.91 on Friday. These are dramatic kind of falls that we're talking about, especially for the dollar. And, the dollar bears are out in full flow with arms saying, well, the decline of the dollar is here. It's going to be long lasting, etc., etc. We've heard that story before, but this decline, I think, bears watching. Now, the backdrop, this is disinflation, right? Dollar weakening, yields coming off. These are market rates which portend disinflation in the US, which is positive for emerging markets through various channels. The easiest way is through the forex and the rates route. For emerging markets like India, it's positive for the currency here. It's positive for bond yields as well. It takes the pressure off, headwind off for emerging market rates and forex. Now, in India, we saw a good pullback on Friday. Last week was, except Friday session, it was largely sideways. But we saw a good pullback on Friday, backed by pretty solid flows from FIs as well, which we will talk about more in a bit. So in that context, in the context of the pullback that we had on Friday, these are the levels. For the Nifty, the upside level is basically the upper Bollinger Band, which comes in at 19,740, approximately, roughly 19,740. On the way down, Thursday's low is something that I would say you need to watch. Should not be broken, which stands at 19,386. We left off at 19,564. So that's the Nifty. Bank Nifty is interesting. It, by the way, got to within 80-90 points of the 20-day moving average, and then it kind of bounced. It reversed higher. It reversed strongly higher after being lower, like the Nifty, for the bulk of the prior week. On the way up, the Bank Nifty's earlier high comes into focus. If a bit of a consolidation phase in an uptrend is behind us with Friday's move, we'll see. But the levels which will confirm are these. On the upside, the higher levels are 45,655, and on the way down, the Bank Nifty, if there is selling pressure which emerges, needs to defend Friday's low of 44,547. We left off at 44,819. The Gift Nifty will come up on your screen, which should give you an indication. I think bulk of Asia is not doing very well, and we'll kind of pick up there. But I think the broader kind of backdrop in the US from a global perspective, notwithstanding the strong rally that we've had, still looks pretty constructive. Sonia.
Oh, absolutely. And, last week, the momentum was intact. And even IT came back in such a big way last week, despite lackluster numbers from a lot of the large cap names, right? So now there are many leaders in this market, including some of the laggards like IT. That speaks a lot about how much momentum this market has. There was large foreign investor buying yet again on Friday, and that's 2 days of over 2,000 crores of buying in a single day. So on Friday, there was about 2,600 crores. On Thursday, there was 2,200 crores. So definitely money coming in thick and fast from foreign investors. Now, this is a big, big week of earnings. We start off with HDFC Bank today. We end the week with ICICI Bank on Saturday. There's Reliance Industries on Friday. And just look at that list. A lot of Nifty components coming out with numbers this week. So it could be a crucial make or break week for the market. Let's not forget the Nifty is now less than 400 points away from the 20,000 psychological mark. So will we hit that this week? Could we hit that this week? Time will tell, but these numbers are instrumental to perhaps taking the market there. Global cues remain positive, as Prashant was also pointing out. It was 100 points in the green for the Dow. On a weekly basis, in fact, the Dow notched its best performance since March. It was almost a 2.5% rise. So there's no stopping the global markets there. In that context, earnings have been quite good, actually. So United Health, JP Morgan Chase all came out with good numbers. In fact, United Health raised the lower end of its full year adjusted earnings guidance as well. So there's a lot of optimism over there. And slow and steady, but gold prices have also been inching to a new high. So it's a 3-month high on gold prices after inflation cooled off. So all in all, there seems to be no complaints in the market. It's sort of like a purple patch. But let's see, the run-up has also been fairly steep. Maybe some consolidation is what the Gift Nifty implies. But the momentum definitely is intact.
Well, that's right, Sonia. And we have got such positive global cues. So the global setup is good, which is good news for our market as well. I remember getting into Friday's, closing bell. We were tracking the Chandrayaan-3 and everyone was cheering for that. Suddenly, the Nifty as well had a bit of a rub-off impact. If you look at the intraday chart of the Nifty, from around 230 odd, well, the Nifty took off. It just didn't take off the 19,500 odd mark on a closing basis after 5 straight attempts. It almost hit 19,600 in Friday's trading session towards the final minutes or so. The averaging is what it brought it down to around 19,565 odd. The Nifty Bank, well, that was a bit of a sore thumb just in Friday's trading session. It was trading actually in the red, and in the last hour of trade, it did spike up. There was a bit of short covering that we saw on the Nifty Bank, and the Nifty IT index, in just 2 sessions, it's added market capitalization of more than 1.6 lakh crore odd. So positioning, the negative positioning or the cautious positioning on some of those IT stocks, that's what took them higher. Now, in terms of trade setup, well, the flows, they are taking the front seat because the flows have been very, very strong. Fundamentals are a bit of a back seat as of now because there are a couple of cautious indicators, whether you're looking at the earnings yield or you're looking at the earnings yield split between the broader markets as well as the Nifty, but that's taking a back seat because flows are so strong. And the Nifty has a date with 20,000 odd. The screen is telling you that. Two big factors to track. This week, you have the banking stocks, HDFC Bank today, IndusInd Bank tomorrow. And then towards the end of the week, you have ICICI Bank as well as Kotak Mahindra Bank. So the Nifty Bank will be in focus on the back of results as well as Reliance Industries. Results, one factor. Second factor is next week, the Fed will be delivering their verdict. So those are the two key triggers that you need to track as the Nifty makes its way towards the 20,000 odd mark. In Friday's trading session, 19,400, 19,450, 19,500 put. All of them were very, very active, and that's why the PCR moved up. Just two cautious triggers that I'll tell you to track. One is the FI net long position. We have seen when it goes above that 1 lakh contracts odd, that's when you get a little bit cautious. For the time being, it's less than 90,000 contracts. The PCR as well, it's moving towards the upper end of the range, but it's at around 1.34 odd. We have seen when it goes past than 1.5, more towards 1.6, that's when we see some bit of a pullback. So those are the two cautious triggers, but we're still some distance away from there. You need to stay long in this market. That's been the call. The screen is telling you that. 20 DMA, that's very, very deep. But in the near term, going by the writing, we have seen at lower level puts, 19,450, 19,500. Stay long. Keep that as a support zone. GIFT Nifty suggesting a bit of a positive start, guys.
Okay, GIFT Nifty suggesting a positive start. Let's see if that rocket that was launched on Friday, whether that continues to reach new highs this week. On the equities front, though, first up, we have some commentary coming in from Chetan Seth of Nomura. He says they remain tactically positive on Asian stocks, given supportive themes of AI, tech cycle recovery prospects, a still resilient U.S. economy where disinflation continues to gain traction, and China's stimulus recovery expectations, which should provide some support for China stocks. On top of this, he thinks a likely softer U.S. dollar on the back of a likely approaching end of the Fed's hiking cycle should further aid Asian equities.
Okay, well, let's get you some money market views now. B. Prasanna of ICICI Bank says that last week, a softer than expected core CPI in the US triggered a broad-based dollar sell-off. Rupee, however, underperformed as the RBI and oil companies likely purchased dollars aggressively around the 82 levels. He says the benign outlook for the dollar and favorable capital inflows will support the rupee in the near term. Moderation of exports, rising crude prices, and likely RBI propensity to add to reserves shall restrict any sharp appreciation. He expects the dollar INR to trade in a range of between 81.75 to 82.5 to a dollar with an appreciation bias.
All right, and on the bonds, V. Prasanna says global yields led by U.S. Treasuries moved sharply lower on soft inflation prints and softer employment data. He says Indian bonds followed suit, aided by comfortable liquidity scenario, which resulted in bull steepening of the curve. He expects the markets to consolidate with the 10-year benchmark bond yield likely to trade within a range of 7.05 to 7.15% range and would await for cues from the upcoming Fed policy.
Well, we have a lot of stock-specific action to track for you. We'll get to that in just a bit from now. But for the time being, let's run you through all the stocks we're tracking in our top 10 segment. We're looking at Just Dial, Unichem Laboratories, KSRAM Industries. They're on the back of positive news flow. On the flip side, you have Avenue Supermarts, JSW Energy, Bandhan Bank, ONGC, Metropolis, Angel One, and Varroc Engineering. They are stocks that could be reacting to negative news flow over the weekend.
Okay.